Hello again, Solis Wealth family. Greg Solis here with the update. First of all, on the family front, the kids are doing great. Everybody's kind of in their rhythm, settled in. Jackson, San Diego, Nicole's in Hawaii, Emily's at school at TCU, and they seem happy. They seem like they're all prospering, and nobody's in any big trouble. So I guess all is well on the Solis family front. Hope all is well with you and your family as well. Market-wise, well, it's been a pretty volatile time, but frankly, more good than bad for sure. We've seen some reports come out here recently. The wholesale number came out, the so-called Producer Price Index, or PPI, came out a little higher than expected for January. It's up 0.4% for the month of January. But when you looked inside the numbers, the components that the market liked was things that made the PCE look a lot better, the so-called personal consumption expenditures. The PCE is the one that the Fed really keeps a close eye on. So they watch that for inflation, and those numbers look pretty good inside. So it seems like inflation is hanging in there. It's not rising up too much. It's hanging, and there's some good anticipation that we might see inflation come down a little bit, or at least hang out about here. So the market liked that. The bond market kind of rallied on that a little bit. The interest rates came down a little bit. The 10-year Treasury is hanging right around 4.5%, and the S&P 500's hovering right around its all-time high. So the equity markets rallied on that. But there's a lot of tension out there with what's going on with these tariffs and the trade wars that might potentially emerge. So that's creating some volatility. So I think there's a lot of tension there with what might happen, and the market's watching that very closely. And is that going to be inflationary? Is that going to hurt the economy? And so there's a lot of unknowns with that. So that's going to it's something we have to watch very carefully as we move forward. But all in all, the equity markets have handled it pretty good. And again, a lot of volatility, but overall things look well. So from our position, markets are in pretty good shape. The GDP numbers still look good. Payroll numbers look good. Inflation's staying under control. And we think that could create a nice, strong market going forward. But we think that there might be some high valuations right now, so we need to be careful and expect some pullbacks and some sell-offs along the way. But I think the fundamentals look pretty darn good. So all is well here. If you have questions or updates or anything we could do for you, please don't hesitate to call. Wish you the very best. God bless.